Joining me now is Gregg Smith, the CEO of Grounded Lithium. Great to see you, Greg.
Great to see you too, Mark.
All right, so your company is bringing years and years of oil and gas experience to lithium exploration in southern Saskatchewan and parts of Alberta as well. And you say that you've got a clear vision to eventually become a world-class producer. So sum that up briefly for us. Give us an overview if you could.
Yeah, I would love to. If you think about lithium from brine, it's very similar to oil and gas because it's all about subsurface fluid dynamics and needing to understand how that's all going to work through time. So when we first started doing this, we identified where we wanted to work. And part of that was understanding what would be some of the constraints in terms of our costs. So shallow depth. We are operating in the shallowest depth possible for lithium that we understand today. And that's important because of the cost structure for drilling. The deeper you drill, the more it costs you. So we're trying to limit our cost structure there. We've also identified an area where we have good lithium concentrations, but we don't have the benefit of any oil or natural gas or H2S. And that's a benefit to us because we don't have to filter those out. So we can, again, keep our capital structure low. And what we looked for early on was thick reservoir with good porosity so that we would have the storage capacity of the brines, because that's what we need. That also leads us to the deliverability. And we believed that we would have good deliverability out of our area. And we proved that with our first well. So we've put together a team that really understands their vision, where we're trying to get to, and we're committed to moving through that and generating and executing our business plan that also benefits with we can make press releases on all the catalyst events through time as we execute.
One of those catalyst events will be a preliminary economic assessment sometime in Q2. You plan to bring it out. Now, your inferred resource currently of lithium carbonate equivalent is 3.7 million tons. So what can investors expect in the PEA?
Well, our first PEA was 2.8 million tons, and that was generated in April, May of this year, or last year, I should say. And we did enough work in the field in terms of drilling our well, getting more data, more results, and also acquiring more land position. So we've been very active continuously in terms of strengthening our land position. And as we strengthen our land position, it also adds to the resource. And I should say that our approach to acquiring land is very targeted. In our mind, we don't just acquire land because we think we might be able to add some inferred resource of lithium. In our model, it has to fit that we think we can make this land commercial eventually in time. So we've been very targeted in our approach to acquiring land, and we're now at over 300 sections of land, or 192,000 acres. So we continue to build. When that PEA is done, we hope to be strengthening it with our additional resource. We will be moving some of the resource from inferred to indicated and continually moving up the ladder as we execute our program. So the investor can expect to see the number increase, but our single biggest goal is to get that PEA done. And the PEA is going to contain material in terms of who did we select? And that'll come out in terms of the work that we're doing through Hatch Engineering and our own internal. So that'll probably be done by the end of Q2. Midway through that period, we're going to say our top candidates are these two, and they're going to receive large volumes of our brine to work with to do more of a lab pilot. We hope to have that done in Q2 simultaneously. At the same time, we're doing facility design work because there's enough overlap within the technologies to say it will likely look like this. So the resource assessment, the selection of the technology, the facility design, it all comes together in a single document that will be the preliminary economic assessment. And we're working hard to do a very solid engineering and science documentation of that.
Gregg, you've said that you've got a lot of catalysts this year, continued testing of your wells. You've got the PEA coming, a lab pilot, a field pilot. So can you take us through that timeline in the next year or so?
Sure, I'd love to. As our vision is to move towards a commercial development eventually, we build a business plan. And as we execute the business plan, that's what creates the catalyst that we will be press releasing as we move forward to keep the market and our investors informed. At this point, we have drilled our first well. We have our own brine samples from our well, and those brine samples have been forwarded out to a number of technology providers in the direct lithium extraction process. We've done that by working with Hatch Engineering, and then we've also brought that expertise in-house by hiring a consultant that works with us, and he has worked on he's a PhD chemical engineer, and he's worked on other DLE projects in Western Canada, and he's providing us guidance now in terms of our process. So by the end of Q1, we should be saying, okay, our top two candidates for our brine are these two companies, and we have in storage large volumes of brine. Those large volumes of brine will be shipped for lab pilots, and that'll be happening in the early part of Q2, we believe, where they will be able to work with large volumes of brine to further demonstrate in a lab pilot how this all works. At the same time that this is all going on, the process between all of these is very similar in terms of what the facilities will look like. So we can initiate facility design without having completely landed on the technology provider. That'll be happening. And then eventually what comes together is the resource assessment, the facility design, and the technology provider to say, here's our PEA. And we're moving quickly towards that goal, and we hope to be in Q2 coming forward with our PEA. So that's the first part of the year. The second part of the year is now we know what we're doing, where we're going. We're going to start to work on a pilot or commercial demonstration facility, and we hope to be having that in the construction phase through the last half of the year. And we'll probably need to be drilling a few more wells to, again, prove up the resource and provide brine content into the facility. So you'll see us doing more drilling through the last part of the year as well. So there'll be a number of catalysts throughout time. And then perhaps you also see us make announcements that would be proprietary today around increasing our resource base in terms of increasing the land position. But we can develop this project out of contiguous lands or checkerboard lands. It will work either way.
So lots to look forward to this year for sure. Gregg, now you mentioned engaging Hatch, the consulting firm. You mentioned an in-house advisor as well, looking at direct lithium extraction, DLE technologies. In your eyes, what are the main advantages to DLE, especially as it relates to your carbon footprint?
Oh, great question. Well, we're working on that as we work through the facility design. But we've seen reports from the industry right now that suggests that in terms of all the battery metals, one of the lowest on a per ton basis will be lithium derived from brines. So the energy required to produce lithium from spodumene has been estimated by others to be 3 times the required energy, because they've got to mine the rock out of open pit mines, grind the rock, sort the rock, dissolve it in hot acid, and then they have a brine that they can then start to extract lithium from. So we kind of short circuit that process, and we're going right to a more dilute brine, but we're going right to the brine, and we'll be moving it through direct lithium extraction. In terms of our actual physical footprint, Most of the lithium production today comes from either open pit mines in Australia or these large evapotable concentration ponds in South America. And DLE offers that ability to really work with a much smaller footprint. So we'll have some producing wells that all feed stock into a direct lithium extraction facility, and then a few wells that where the brine gets disposed of. So the actual physical footprint, it won't look much different from a small scale oil and gas operation, conventional operation, not a heavy oil operation, but a conventional operation. It'll look a lot like that. And we're very pleased that we can have this much smaller footprint. And DLE is going to be this major disruptive influence within the lithium market in terms of providing lithium to the necessary facilities, whether it's battery manufacturers or the auto manufacturers.
Now, you aim to be producing commercially by 2026. So as you work backwards from now to there, from then to now, what is it in terms of the keys to momentum and to getting there, basically getting to the finish line in terms of executing? What's important?
There's a lot of things that are important. A big part of it for us is having that vision of where we're trying to get to in the long run. And our team knows our vision. And everybody on our team has short-term goals that are derived from looking at what's the strategies, what's their tactics to get us to that next level. So I'd say probably our biggest major event will be the PEA, which we are looking forward to in the first half of this year, probably later in the first half of this year. But those are the hurdles that we're moving forward towards quickly. And we've done a lot of the technical work. We've done a lot of detailed technical work to supply the information to get there. We talked about Hatch. That'll be a key part to this. But eventually, we're going to get to that point where we've proven this works. Our peer group, there's lots of companies out there making significant announcements about how they're progressing direct lithium extraction. Lake Resources, Standard Lithium, they're kind of our senior peers, but they're making great progress in terms of demonstrating DLE works. And once we have that in front of us, it's just a matter of the execution and finding the sources of capital to build out that facility and move towards commercial production. But make no mistake, with our cost structures in Canada to be able to do this, with all the oil and gas experience that we have in the provinces of Alberta and Saskatchewan, this can be quite economically attractive.
Greg, I think it's fascinating for investors to see what you're doing, bringing oil and gas expertise to lithium exploration and development. What are some of the main similarities? What are some of the main differences? And maybe some things investors may not have even thought of before?
Well, if you think about oil and gas, it's all about subsurface fluid dynamics, moving it through the subsurface. And what a lot of people don't realize is a lot of the oil and gas production comes with a lot of brine. We're used to seeing the downslopes of oil productivity out of a well. Well, if you actually looked at a lot of these wells, their productivity is flat. It's just that the oil percentage drops through time. And so we're doing something very similar. We're just focused on a different fluid, and that's the brines. And that's where the understanding of the subsurface that you gain in the oil and gas industry becomes important. If you stop to think about, how much brine are people moving, they're moving tremendous volumes of brine. And then our mind boggles about, well, what does that facilities and pipelines look like on surface? Well, we do that every day in the oil and gas industry. What we really need to understand is we're going to be moving so much brine fluid. We need to understand how that all connects and works in the subsurface. So we've built extensive data and data models to tell us how that's going to work. So we can then identify, well, how close do our wells need to be? What's our depletion plan going to look like through time? So that we can then create a solid economic assessment of how this is going to look in the long run. And it comes from oil and gas experience.
Lastly, Gregg, you've said that grounded lithium has a good early torque for investors to the energy transition. And Kobe Kushner, Red Cloud's analyst on your company, says it's just a matter of time before the market figures out that grounded lithium is a top name. So what would you say to investors in terms of your investment case? What makes your company different and unique?
We're a later entrant than some of our more senior peers that are out there. We incorporated in November of 2020, but you can also see how far we've come in a very short period of time, and we're trying our best to get caught up to our peer group. So because we're early stage, we're trading at a lower volume, we got great torque. But where I think we can distinguish ourselves in the long run, and we want all of our peers to be successful, we just want to be a best in class if we can. And the way we've looked at doing that is shallowest drilling. We are by far and away the shallowest place being drilled for lithium today, at just 900 meters to the top of our zone. And a lot of our peers are twice that. So that all creates time and money when you're drilling your wells. You need lithium concentrations. Well, we've got that, but we also need that within the brine and high deliverability. So we focused on an area that we thought had excellent reservoir and thickness. And because we believe that would give us, well, we know that would give us the volumes, but it would also give us the deliverability. And our first well proved that. We've been able to demonstrate with that well that we can produce flat at 19,500 barrels per day per well. And if you stop to think about why is that important, well, the lower the productivity, the more wells you need in order to fill your facility. So we've got good deliverabilities with lithium concentrations. And the other thing we started to look at was, well, the process for extracting lithium from brines is degraded by the presence of oil, gas, or H2S. So we purposely went out and targeted an area that had none of those contaminants within the brine. Oil is a contaminant in our case. So that would limit our facility costs up front and our operational costs, because we won't be needing to extract oil or H2S. So that's why we kind of try to be that best in class and have a low cost operation.
Thanks for your time today, Gregg. We'll be following, and we'll talk to you again.
Thanks, Mark. It's been a pleasure.
Okay, Gregg Smith, the CEO of Grounded Lithium.